Hello. Um, Today, Monday, March 4, 2024. Let's see. Market prep 48.30. So US 500. 3 months we have nothing here. Fair value gap. Go weekly. Is there something we could use? We have this order block. Fair value gap there. Don't see anything. Nasdaq. We have an order block on Nasdaq. So let's just use the Nasdaq for now. The Nasdaq. What is this? Okay, let's see. Move. Take this as our point of interest. Price could be reaching into. Okay, then let's see. Daily charts. Oh, weekly I also see this relative equal gets swept. This should be buy side. Nope. Okay, I'll go daily. Daily, I don't see nothing yet. We could see price moving down to internal range liquidity, and then we could trade the reaction if it goes, and then make something inverse of fair value gap of SIBI, and we could probably take an entry for internal range, internal to external range type of play again. Or this will be Monday, and then Tuesday takes out this high. That will be good as well, and then goes down, creating an order block. Maybe we don't have order blocks. Do we have them? No, not yet. No order blocks. I don't see setups here, but we do have equal lows at this fair value gap. Excuse me. Look at H1. Okay, wait, I'm seeing something. This could be an order block, so I'll just use this to buy side. No, I'm not gonna use that one, just this. Look at that. The high of this is 18316, and the open of this is 18316. The same. It's practically algorithmic. So if we can see price holding off this, we could potentially see a rate into this equal low, into this fair value gap we have down here. So look at H1, see what we see. We see an imbalance. So this further plots out our narrative for where price want to go. If we decide to make a swing low here at 9 o'clock p.m. or 9 a.m. here, we see a swing high on the left side. This means this swing high rebalance this fair value gap that is in a bearish order block, which makes this high long term and this swing high intermediate term high. So I don't want to see this gets broken if we decides to make a swing high. Then we are most likely to just inverse this block, bullish order block, mitigates it for a run to the fair value gap below. That's potential. Or if we decide to close above this, we might be able to reach here. Because this is Monday, not a lot of volatility, you can expect this day to be manipulation. If that was the case, then we will close out this fair value gap in the 1 hour chart and then uses it as mitigation. Those sellers he wants to mitigate their position, which means buying their position back. So you should see this type of play. Or inverse bearish, then go. Yeah, we have two scenarios that we could see potentially play out. Oh, we also have this gap though. This is interesting. Oh, this is perfect. Okay, so we close above here. We might potentially just do this. Or this. This gap is in line with this bullish order block if it were to go down, making it a very high probability mitigation for sell side delivery. But this one, if we manage to go up, this down close candle will become an order block, and from this high to that open will be the range for our bullish order block. And here is our consequent encouragement in line with the gap. So this point should be high probability if price were to close above this swing high, closing out this inverse fair value gap. We could see price decides to take this swing high, long-term swing high. That's our play. That's our plan. Let me see if I can say something. 15 minutes. Well, we have this obvious double bottom, then relative equal low. Let's see. We have an imbalance. It is rebalance. Got a few fair value gaps. Looks like it's being used. Market structure shift. Yep, we could potentially see something here. Because look at this. Oh no, above. Yep, right there. Is our bullish order block. Yep. Changing state of delivery. We took this sell side and then goes up. This becomes a high probability order block because it is supported by a higher time frame old low. Now it breaks. If price decides to break this down close candle, it will become an order block. And since this order block taps literally to the pip of this order block, an institutional order flow entry drill, this becomes an order block that interacts with this order block. This becomes a propulsion block. If price were to go up on a propulsion block, we don't like seeing price crossing below the mean threshold. So this is the mean threshold. It overlaps with that gap, so high probability this gap will hold. If price decides to break this swing high, you can see potentially price coming up here instead of taking up that relative equal low, because this is our context. Okay, now I want to look for sorry guys. Okay, we have the US dollar now. Sorry for all this scribble. This bullish candle, up close candle, goes down, becomes a bearish order block. So much stuff in here, yeah, but good. bullish order block. I only want to use the open at this case because it's at the premium of this range instead of this one. Okay, I gotta use this blue line. That's what I see. Monthly chart. What do I see? What do I see in the monthly? We have this two consecutive up close candle goes down, making an order block. Yeah, this must be the 3 months bearish order block becomes the mean threshold of this monthly bearish order block, and looks like we are reacting off of that. Let me see if I could just mark. Okay, no, we have yet to come to that POI, so this should be interesting. We have this fair value gap. Take note. Also have a fair value gap right here, but I'm not gonna apply that yet. You know what? Just gonna apply it anyway. Okay, so go to my weekly. Bunch of distraction, I know. Bear with me. Okay. Why is there EMA? Okay, no EMAs. Just pure price charts. Okay. I'll move this way. I'll just do it. Okay. So this was our bullish monthly fair value gap, SIBI, and these are busy weekly. This is our position. We have yet to come to our weekly SIBI, nor to our order block open price, just on that high. This would be interesting. This is a bearish SIBI, and we are reacting right on it. So that high should be really high probability because it is in context with our monthly SIBI on the right, left side, right? Look, the upper fair value gap of this SIBI is monthly SIBI is in line with this weekly swing high. So that should be our quickest draw on liquidity right here. And we have this monthly chart fair value gap, so it aligns with this. So I'm gonna take note of that low right there, this weekly. It might just go there, but I don't think so. I think price will go here on this day. So gonna look for the daily now. Why is there two stuff here? 29 February, 1 March. What is this? I'm not sure. Not sure at all. Okay. This was the fair value gap that we target on our previous video, 1st March, where we used silver bullet on this candle. The green candle target this busy after price took that buy side right here. We know that price doesn't want to rebalance this SIBI yet, so it wants to go to this busy before going there to refuel, taking out this sell side liquidity in the lower time frame, which is the London low. And we see now price is respecting this order block right there perfectly. I'm not gonna remove this fair value gap now. Price respect this order block and rise. I want to see this get inverse, perhaps our old entry. Oh wait, let me recheck. Okay, there's nothing else. Probably this fair value gap. I mean breaker block. This is a breaker block. This, if were to be inverse, be powerful. Let me look at AH4. On H4, this is an intermediate term low because we rebalance this, and we are right from this long-term low, intermediate term low, another intermediate term low. Rebalance this fair value gap, which is the bearish, this bullish order block on the daily time frame. So we can see potentially price taking out this swing high. Sorry, right here. I'll remove this one now. This should be very, very, very high probability. This 2 down close candle could be a bearish order block, becoming propulsion. Who knows? 2 down close candle becomes propulsion. Forgive me, I'm a bit allergies. And this was our silver bullet. Oh, this was our silver bullet. Okay, let's remove that for now. I like clean charts. This was our position, 2.4 RR. Let's remove that. Our London low equal low. Target into that busy. We don't need that now. Less distraction. Okay, this is what I'm looking at. We have this SIBI, sell side inefficiency, buy side imbalance. Oh wait, sell side imbalance, buy side inefficiency, because there's no buy sides in here, making it buy side inefficient. Okay, I want to see price go off here, come down. So my game plan would be like this. Boom, like that. That should be high probability. I don't want to see price coming down. I don't think that makes sense here. I don't think price will go down here. This should be very bullish to the upside. I don't see no bear setup coming off of here, because this was an intermediate terminal that rebalanced this fair value gap. I don't want to see this gets broken. We're practically very bullish. We came off an internal range liquidity. It's a fair value gap in our time frame right here, making this a long-term swing low. Potentially breaking out this external range high, which we did. The price decides not to rebalance the SIBI yet because it needs more fuel. It decided to take out this outside liquidity and to also rebalance that busy right over here. We delete it. So now price is likely to go up, very probability, high probability. This is on Monday's trading. Yeah, if I see price coming up here, down, we'll look for potential silver bullet again. So we'll wait and see. BSD Oh, look at this. Not seeing any price coming up near now. It's not breaking up this high. Maybe it gonna break this low. Who knows? Shall see. Go my 4 hour. What's this? We also have a fair value gap on the H4. Huh. Right there. I wonder what that is. If we look on the daily, we also have a gap. Why is there so many volume imbalance? Which one to use? I don't know. Let me look on H1 again. Why is the chart so small? Okay. Okay, this. Oh, so many. I don't think I should use the gap. We have this gap, this gap, this gap. Which one to use? Let's just use the much lower time frame. It's logical to use the lower time frames gaps because it will cause this movement, right? We had this gap from the downside to the upside. I'll use this one. Yeah, that's our mean threshold. Mean threshold. Yeah, I'm not gonna use this one. It's not within our context, too short, somewhere between here. I like this one better because the H1 gap. Right, we see here. Okay, so I'm gonna look here on the 50-minute, just watching price do its thing. Propulsion up here, use this as a propulsion. If it goes down here, then this is probably just a Judas swing. We'll look at the 830 open, which is very close right now. Why am I? Okay, it should be on 830. And then the 00 for daily range. That is our daily range. I'm gonna take note of this opening price, 00 opening price, and also the feature 830. Also gonna do this on the FX pair. Look for the 00. Here's the 00. We have the open right there. Oh, it's right on the order block. So this, if price decides to come here, then you could still see a potential bullish up move. Look, we also referenced the 830 though, so that's fine. We'll wait for the 830. Although using this power of 3 concept, this might not work. Why? Because like I need 830. Okay, let's just watch, and then I'll show you why. This is not high probable right now on the power of 3 basis. Nothing here. I prefer the buy side because we are also an index. We are all at all-time high. I like to see this first move rather than the one here, the second one, because we're all-time high, probably gonna continue up even though this is a relatively low. Price might just take this buy side as fuel on Tuesday and then target this also liquidity into this order block on the higher time frame. This is the high and the open of that down close candle we marked up. We have a pretty good range. This is our setup. Just waiting what price does. Gonna use maybe 4 contract this time, and this also 4, so that we can play around with the contract sizes depending on the situation. I'm gaining more confident with this. So this is 830. Gonna apply the charts right there. That's 830. I use the closing price of this previous candle, may mark up that opening at the 830. So now we have this range. Well, okay, now I'm gonna discuss why. If we do get it close above here, we still have this range, right? If power of 3, then I would like to see the 830 opening be around this high, so that in that way when price comes down we are at a discount for smart money accumulation, and we also have this inverse fair value gap for mitigation to go long. But this, in a power of 3 bias, this becomes a bit low probability, in this case on power 3. Yeah, why I'm still confident with this, because power 3 is basically IRL and ERL as well. So as long as we break through this inverse fair value gap and showing signs of respecting it, then I don't see why we shouldn't go long here. It looks great, even despite we're alright 830 here and we'll probably be on premium side. I'm not afraid to go long because this is high probability in my opinion, but in timing wise our 830 is here, so this is not that probable because this premium range. We're also on Monday, which will not push and give us this type of range entry, right? Let me check on news if we have it. Economy calendars. Okay, today, Monday, do we have any high impact news? We have Fed Harker's speech at 11. This will be probably our volatility injection. Tomorrow we have ISM surface PMI on 10 o'clock. Okay, so actually Tuesday is more high probability. If I don't see price, I don't think price will break above here on Monday, then Tuesday will be high probability that ISM surface will push higher, probably go on discount and push higher. Right now, no. Okay, now let's see. We have this gap. I need price closing above here. Go further. Push my agenda. Where price trying to go? It's in line with this imbalance as well, right? Before 11 o'clock. So, gonna mark 11. This will be the volatility injection point. Mark it here as well. So there will be volatility injection at this hour. Shall see what price does until then. This is our plan. Shall we wait until 11? What do you think? So I just watch price here, how it forms. This looks very bullish though. If we've gone bearish, then I don't know. Shall we be flexible and go short? Yes, we have this equal low. But on USD CHF, if we do have a short position, shall we go short? No. Why? We don't have any potential liquidity here. It's not that high probability. We do have this order block, intermediate from low, and then something maybe down here. But I want to see Tuesday to come up here anyway and do something. Maybe check another time frame. Yes, we have this bullish order block. If Tuesday decides to take that, we might see price lowering down, who knows. They're filling the gaps. Yes, we do have gaps there. All in all, I don't want to go short in the dollar yet. This is not bearish at all. We are in a BPR, BC, CB. Might see some shorting opportunities here, but I'm not bearish, bro. I was bearish before, but I don't think this will be bearish. We have no reason to be bearish right now. I want price to go above this tricking this player who shorted here will get tricked, and then we use the re-entry, first re-entry, as our mitigation for them, for their mitigation to go long. That's my game plan. This should be longs. I don't want to see anything else than that, so probably gonna wait 1 hour from now, so maybe on 9:30 we should see something, some movement. 9:30. 9:30 is the index opening session, so another injection of volatility. We're gonna see some price action here, good price action 9:30. Until then we'll wait. Also 50-minute there, mark out the 9:30 as well, right there. Now we wait for price to develop itself. I'm gonna pause. We'll see you on 9:30. Peace out.